All right. Welcome back, everybody. Quant Bros, episode 5. This one is going to be a lot of fun. Godzilla and Omega. We are going to hit it hard. We're going to talk about Bitcoin. We're going to talk about MicroStrategy. We're going to talk about nation state adoption, maybe, get into some technicals a little bit and kind of see where the conversation goes. Obviously, our guests need no introduction. We've got Adam back and Samson Mow on the call, and we are happy to get into some of the nitty gritty. Adam, Samson, thanks for joining us. We are incredibly excited to have you. It is an honor to be on the same podcast as you guys. Without further ado, we'll kind of kick it over to you guys. We're hoping you could talk about some of the items that you're working on, some of the things that you're devoting your time and energy to these days. I think, Adam, you were at Bitcoin Prague, so it might be good to give a little update on kind of the sense of, what you're feeling and you're hearing in industry from the Bitcoin front, and then Samson dive into some nation state adoption, and we'll kind of take it from there.
Sure. Sounds good.
Yeah. So, thanks for having us on. We're all always happy to talk about Bitcoin, of course, and MicroStrategy is a kind of shared interest, at least amongst the traders among us. As a kind of Bitcoin basis trade, as it were. So the Bitcoin Prague conference, I went last year and I was pretty impressed. It seems to be the largest kind of Bitcoin focused conference in Europe. I think it's a little bit bigger this year than last year. It was I think 5,000 or 6,000 people last year and a couple of thousand more this year. And it's all Bitcoin, and they have a pretty good exhibition hall. Usually the exhibition halls are kind of afterthought, but here the exhibition hall's were well organized. All the Bitcoin companies like the Trezor, Ledger, Brains, and ourselves with hardware wallets and miners and all kinds of stuff, right? And lots of different companies in the space. So I think people had a lot of fun just walking around the exhibition hall, looking at product demos, buying hardware wallets in person, asking people from the company, questions about it. So it was pretty enjoyable, and they have a different ticket price where you can get into the exhibition hall a lot cheaper than the main stage. So that's kind of attractive.
Have you gone to the US Bitcoin conference? How do they compare in size and scale?
Well, the Bitcoin Miami one, which I went to right after the COVID ended, was kind of the largest. I think that was supposed to be 30,000 or something. That was kind of crazy, and I think people were blowing off steam after COVID, and the next year was a bit smaller, and now they moved it to Nashville. So I preferred Miami, but there you go. And, but it's a little bit less focused, right? So there's more kind of altcoin-y things creeping around the edges, whereas the Prague guys, it's kind of a larger version of HODL or Breaking Bitcoin, a kind of Bitcoin-centric conference, but somehow much bigger and still Bitcoin-centric. So that's cool.
Excellent. Great. Yeah. Maybe I'll kick it over to you, Samson. Any particular topics that you're working on? Where are you devoting your energy these days? What's the last couple of weeks look like?
Yeah, right now we're really focused on Aqua development. We are fixing some bugs, and the Bolts guys are hammering at us every day to get things tidied up. So we've kind of put Bitcoin adoption on hold for at least a few months, but in Q3 this year, we'll plan to get back into it. And hopefully we can get some traction going again. But right now, it's all about Aqua.
All about Aqua. So I downloaded Aqua last night. I actually sent myself some liquid sats. I got the whole app going. I'm excited to share it with some other folks as well, and kind of work through the layer 2 type solutions. And I guess it may be interesting to give some perspectives to the listeners on what you guys are seeing for adoption, just thinking about Bitcoin generally, not only the pleb community, but also nation states and other corporations. We're in the theme of talking about Godzilla candles and Omega candles. We're talking about massive potential changes to the Bitcoin price, and that's likely not going to be driven by your pleb retail buyers that are buying $10 of Bitcoin a day, right? That's likely going to come from more adoption of utilizing Bitcoin from these more institutional type buyers or larger type buyers. So I'd be curious to get your perspective on, what drives that? How do we get to a Godzilla or Omega candle? And, how much buying pressure do we need? What kind of volume do we need? What, how do we get there? What does it look like?
Well, I think we need some people to stop selling. It seems like, an odd time to be selling. From what people have been able to figure out from public data, it looks like the mining stocks, like the public mining stocks where you have visibility, are selling perhaps because, mining profitability is still not caught up with where it was pre-halving. And, those companies got public data points. I haven't gone and analyzed them all, but evidently you can see that their reserves are shrinking. So I think it's one component. Of course, you always get reflexivity. If the price falls, other people panic sell or get liquidated. So we got rid of some leverage, which is, sometimes good for having a firmer base. But the ETF volume since the ETFs launched have been huge. It's broken a number of records in terms of ETF launches, continuous days of inflow. In the case of GPTC, continuous days of outflow, maybe. That fund is lost its whole position as the bigger of the ETFs. And it lost over half of its Bitcoin holdings since the ETF launch. So yeah, I think it's the ETF inflows are non-trivial. Right? It's big multiple of daily mined coins and things, right? So as soon as and I don't think generally that anybody wants to sell now. I think the people that are selling are either over leveraged, which will happen, right? But the people who are selling are probably forced sellers. They're companies with operating costs. They got some interest to pay on loans for expansion or what have you, or they're selling coins to cover the power costs because mining is not as profitable as pre-halving. I think the halving was fine. It's more profitable now than it was when the price was 15,000 in late 2022 because Bitcoin price has gone up more than twice. And so, between then and halving, so it's actually more profitable now than it was at the bear market. But it's there's a lot of ASICs around. There's kind of oversupply of ASICs, so they're coming. Hash rate's creeping up, even though the profitability's not going up as fast as we would like. And so I would think that I don't think they want to be selling Bitcoin. Typically they've accumulated those Bitcoins in the previous period. So yeah.
Yeah, there's a lot of game theory associated with the decision model of owning a mining company, of taking profit today to finance new ASICs in the future, or new expansion into territories where there's many different ways to run that business model of utilizing your Bitcoin or holding your Bitcoin and as a function of whatever your power or energy costs, right? So yeah, it's complicated.
Yeah. Okay, so maybe we should recap for your viewers what a God candle or Godzilla candle is and Omega candle, because they may not be familiar with the terminology.
Yeah, absolutely. Sure. Hit it.
Okay, so the God candle has been a thing or a meme for a while. It's a 10K candle on the daily, and I expanded that with the concept of an Omega candle, which is a 100K candle on the daily. So the Godzilla candle is something Adam came up with to rebrand the God candle. I think it's more clever because you have a lot of the Godzilla energy beam going up memes, and they're green now, which is nice. But the Omega candle is just like a 10x God candle. And I think it is very possible that we'll see that in the coming years, or hopefully in this year, because of all these macroeconomic factors that are present now, and with the advent of the ETFs, which open a portal into the legacy financial system, which allows for billions of dollars to come into the Bitcoin marketplace.
If we can talk about some of the incentives that would lead a nation state to want to make that adoption and thus create a Godzilla or Omega type candle, from my perspective, the way I kind of view public markets is that the optimal candidate for Bitcoin adoption would be a founder-led company that's in the Russell 1998, which is the Russell 2000 minus MicroStrategy and SMCI, and about half of the S&P 500, whose revenues and net income are really not even keeping up with, the M2 money supply's average CAGR of 7% each year. So that's really what I see as the founder-led, because of the sharing and kind of company governance perspective, but also the public company, because they can either buy Bitcoin with cash or they can go the Michael Saylor MicroStrategy playbook and access the capital debt markets. What would the equivalent incentive structures look like for nation states to adopt?
Well, for nation states, there's a wide range of reasons that they need to and should adopt Bitcoin. The first is simply they want to protect their money supply, right? That's why central banks typically buy gold, and Bitcoin is simply a better form of gold. So it makes logical sense for them to accumulate Bitcoin. The other is economic growth. They might want to spur investments and make it cheaper for people to remit if their economy is based on remittances. So that's another reason they can adopt Bitcoin as legal tender. But there's just so many different ways for countries to adopt Bitcoin. They can start mining as well, because usually energy companies are state-owned, so it's basically their own energy. And if you take Canada as an example, we either run off the excess water or we sell it for pennies to the US, which could all be used to mine Bitcoin. So I think the more forward-thinking countries are going to implement some form of Bitcoin strategy, whether it's Bitcoin legal tender, Bitcoin as a treasury asset, or some sort of Bitcoin mining facility, maybe a Bitcoin bond. But it is really to protect themselves. It's also a defensive strategic move too, because in times of turmoil like war, for example, the financial system, the legacy financial system breaks down. It stops functioning. I think a lot of people forget that happens. If you want to be able to transact during times of strife, you do need Bitcoin. Otherwise, there's no way to buy things, like buy defensive arms or weaponry or anything of that sort.
How are the leaders that you're speaking to in these nations, how are they responding to these conversations? Are you going to them? Are they asking for your assistance? Or is it proactive or is it reactive, is one? And two, are the conversations met with resistance, or are there certain components that nation states are more interested in, whether that be the correlation of power and energy to wealth, or is there a certain topic that just hits really well, or do you have like your pitch fully baked?
It's a bit of both, I would say. We do get a lot of outreach from countries too, and we actively try to reach out to some countries. Like for example, Argentina, we want to sit down with Malay and have a long chat about Bitcoin. But there's not really resistance. I think there is a decent level of understanding of Bitcoin, at least cursory level of understanding of Bitcoin. Maybe not as deep as we understand it, but they do understand what's going on. And I think the ETFs have a big part to do with that, because they effectively legitimize Bitcoin as an asset class. So you can't really say Bitcoin is for criminals and bad people anymore. It's for BlackRock. Whether you think they're good or bad is up to you, but it's changed the whole conversation. But the challenge, I think, with nation state adoption is getting them to actually do something. So we met with the president of Colombia. He wanted to start mining to remove a flare gas installation, but it's just been slow to get traction. Working with governments, it's like trying to turn around an oil tanker. It goes very slowly, and then eventually it'll get there, but it's not always fast. You might have some smaller, more nimble countries like El Salvador that can do things very quickly too. But that's usually the outlier. And the unique case for El Salvador was the president was already a Bitcoiner, so you don't need to start from ground zero and go to orange pill mode with him. He's already there. So it's more about pitching existing interesting things you can do with Bitcoin, like Bitcoin bonds. For other countries, you have to take them from 0 to 1, and that it does take more time. But there is a lot of interest out there. The other challenging thing is that the political tides are always turning. So sometimes we expend a lot of effort and energy working with one of the governments in a country, and then they're voted out or something changed and they're no longer in power, and then we have to wait and start from zero again. Or you need to time the election cycle, so they might be running out of their current term and then they can't really do anything. Usually with politics, when they're in their final term, there's not much they can do, simply because of the lead time you need to get to action. So basically the first year is almost a write-off because they're starting to warm up, and then you have a couple of years in the middle where something could happen, and then in the final year they don't really want to do anything. So it's a really tricky field to navigate.
Right. Wow, man. I can imagine. Yeah. Every single person you talk to has a different baseline of where they're starting at and where where they're at in their orange pill adoption, and let alone convincing whole cabinets of constituents that it makes sense to invest in this specific direction. I mean, there are many other. Obviously, Ryan and I are based in the U.S. Samson, I'm not exactly sure where you're located, but the conversation has got to be significantly different in countries that have had drastic inflation compared to other countries like the U.S. that are a little bit more stable, and the inflation has been I guess eaten up by the population. Are there more countries that are more worried and moving faster than others?
I would say so. The other thing is that in El Salvador, they're able to move quickly because Bukele controls the majority of their legislature. If you look at Costa Rica, for example, we did have some meetings there at a very high level, but there are 6 political parties, and they're all about the same in terms of influence and control. So you kind of need to get a consensus there amongst all of them, which is not easy to do too. So even if you orange pill the president, nothing will happen because they have to work with the other parties and they have to get everyone to agree. So it's much harder on some of those types of setups. But like you mentioned the U.S., which is interesting because now the Bitcoin topic has really jumped to the forefront with Trump speaking positively about Bitcoin and saying he's going to make Bitcoin great again. And then you have Bobby, RFK Jr. He's also been talking about Bitcoin for some time as well. So the only one that's not actually engaging, at least publicly, is the Biden admin. But it sounds like they are making a foray and they will start to engage slowly too. So the entire discourse has changed from we want to ban Bitcoin and we don't want Bitcoin to we welcome Bitcoin. And I think with the U.S. as the major superpower, when they change to a favorable tone towards Bitcoin, I think that will shift a lot of the geopolitical discussions elsewhere. The first is that I think you'll have monkey see, monkey do. Other countries will simply emulate, or other politicians will emulate the U.S. because that's what they tend to do. They follow the U.S. But for adversaries of the U.S. that don't have the benefit of being the issuer of the world's reserve currency, they will need to go to Bitcoin. So the game theory around here is very interesting because they're going to try to make their own currency, like the BRICS currency. I forgot what it's called, but that will probably fail. And then they'll have to go to Bitcoin. So they'll try something and they'll fail at it, and then they'll end up inevitably at Bitcoin. And they need to be very for Bitcoin if they want to maintain their positions as a major adversary to the US, simply because there is no other alternative to the US dollar. So if the US props up the dollar with Bitcoin reserves, like some politicians might do, I think Bobby Kennedy said that he would do that, then the other opposing countries would have to embrace Bitcoin. So Russia, China, and others.
Wow. Yeah. Okay. So I guess I bring it back to this Godzilla candle, Omega candle. There's macro factors that are on the horizon. We've got a big election coming up in the US that may kind of kick off this proof of concept that this is good for your country, this is good for your population, this is good for your economy, right? It's good for everybody. And I guess in thinking about, everybody wants to know timeline, right? When 100K, when are we going to hit 1 million? What are some indicators that you guys are looking at, Adam, Samson, that are interesting to you? Like what are you guys following from an indication standpoint that is kind of like leading you to this? Is it hash price? Is it volume? Is it ETF flows? What's interesting?
I talked a lot, so I'll go give it to Adam.
Yeah.
Well, yeah, I was just looking down the far side total ETF inflows since ETF launched, and it's, there have been a few days of net outflows, but you've also had like literal $1 billion inflow days. And, if you consider that as a percentage of daily mined coins, it's like a huge multiple of it, right? It's absorbing weeks of daily mined coins. 10
days ago, we had a 27x multiple. So we're actually working on some charts for jan3.com, and we're coming up with this metric called supply-demand imbalance. So this is the multiple of how much more demand there is than mined coins. And the caveat is there's more demand than just ETFs. There's probably, a multiple on the multiple, but 10 days ago we had a 27x multiple and then a 15x multiple. I think these are those billion-dollar days because there's only 450 coins mined per day right now.
Right. I think the other question mark is, it's a known factor that, so somebody might naively think, well, Bitcoin's market cap is, 1.3 billion or whatever it's at, trillion. And if, if it's to grow to 2 trillion, you need 700 billion, but that's not the case, right? It's price is set at the margin, and we don't know exactly the multiple, but people are saying I think Bank of America put out 115, 120x multiple a while back. Some people are like maybe it's less, it's 50, but really that comes down to the type of investors. And I know Warren Buffett doesn't like Bitcoin, but he's got this kind of idea with Berkshire Hathaway that you want good investors that, if your share price falls, they want to buy more and that they don't get shaken out if the price falls, right? And from that perspective, it's interesting that Eric Balchunas, who's a kind of professional ETF commentator, was saying that the data indicated that the ETF holders kind of held on pretty good through some pullbacks since the ETF start. I didn't actually sell very much of the Bitcoin they've accumulated, because we don't know exactly why, but my supposition is that somebody who is putting, a portfolio reallocation into Bitcoin, right? They're calling their broker, their financial advisor, and they're saying, oh, I want to buy some Bitcoin, or the other way around, financial advisor sees, we're talking about Bitcoin on Bloomberg, ETF inflow up today, start calling their clients. A lot of momentum trading going on, right? And so they're basically going to say, well, what do you want to sell? Where do you want to pull the money from? It's not new money. It's like existing money reallocated from top 10% minus the top 1%, those guys, right, in the US. And those guys control I don't know, $30 trillion or something, right? So it's a lot of money that could flow in. So they're just going to sell something, sell some gold ETFs, like the gold ETFs are seeing quite high outflows. And then they're going to put, their 1, 2, 3% allocation, whatever it is, into Bitcoin. And they're not going to day trade it. It's a 1% allocation or it's a 5% allocation. They get portfolio theory a little bit, or their advisor is telling them that. And I think they basically put it there and leave it there for 3 to 5 years. And so that's just basically people who trade via brokerage accounts where they call their advisor. They're not on E-Trade trading. I mean, there are some people that do that, but I think that's the new money that's brought in primarily. And then so that's positive for there being a high multiple on money in, right? So that means $1 billion inflow is sticky. And so you should count it as a higher multiple because it won't sell again as easily when the price falls. So it turns out, we didn't know this, but it turns out they're pretty good holders, which is good for Bitcoin price structure. I think that kind of effect is also partly why you see, this kind of stock to flow like model where Bitcoin still seems to keep going up by high multiples each halving cycle. And it's basically because you get new people who learn via the hard way, right? By getting shaken out that you got to hold, don't day trade it, etc. And so it turns out the ETF buyers, they come in that way. That's how they already are, right? Partly due to the allocation, partly due to what a financial advisor would say about buying stocks. Don't put money into stocks that you need in the next few years, right? So if you sell it straight away, it's not the point. So that's one set. And then the other set of investors we could talk about is the actual institutional investors. So, the pension funds, the mutual funds, and the managed funds, structured products, themed funds. And there's a few early signs of those, there's some ARK Invest, a smaller BlackRock fund. There's a few things out there, but it's not very much yet. And those things take time. I think, that's a whole other huge pool of capital that's yet to allocate. And they're just looking for return. And bonds are not a lot of fun right now. So there's something to be said from adapting the 60-40 portfolio rule to, something else, right? With a Bitcoin component.
Yeah, for me, the indicators I look at are ETF, AUM, hash rate growth. I look at Bitfinex a lot because it's a really good exchange that they have the whales there. So the whales are a really good indicator of future behavior. So if you see accumulation on Bitfinex, then generally you should assume that the price is going to go up. I also look at the 200-week moving average, which has always continuously gone up since Bitcoin's inception. I look at USDT AUM, which is always going up as well. Interest rate payments on debt, inflation, nation-state Bitcoin adoption, which we talked about, and M2, M3 money supply, which is starting to come back up too. So yeah, there's a lot of indicators, and all indicators are pointing up. And if you look at every single model that people create for Bitcoin, whether it's stock to flow and a new popular one is power law, they all go up. There's no model for Bitcoin that goes down over time or stays flat. It's always up. So whether you believe in any of these individual models or not, you should assume that Bitcoin does go up over time. The model that I work with is usually is a median growth. So if you look at Bitcoin's median growth every year, it's about 60%. Average is maybe 62, 63. But if you pick a few segments of 5-year terms, it's about 60% median growth. So if you look at those numbers, and these are the numbers that I use to project for the Bitcoin bond in El Salvador, if you start out at 2023 at 27K, then in 2033, Bitcoin is 2.9 million. So somewhere between here and 10 years later, we're going to be multiple millions of dollars. And the median growth is interesting because it is 60%. But if you look at it year by year, it fluctuates wildly. It goes up and down sometimes, and the growth years can be massive. But on average, it's like 60%. So it's a very interesting and very conservative estimate too. But by this estimate, I would say it's probably undershooting by a factor of 3. So in 10 years' time, it's probably $10 million a coin, not 2.9 million.
So I think you guys both hit on some really good topics there. One, the price of Bitcoin is what's trading at the margin, right? There's this multiplier effect of new capital that's coming in, where you've got this demand imbalance and a supply imbalance. I like the triangle chart that you guys created. That was fantastic. It was a good view of the amount of capital that's coming for this little tiny triangle. I think the question that's generally on everybody's mind right now is, right, if there is this supply imbalance, right? If we're seeing billion-dollar inflows from ETFs and we're seeing all of these big changes from dollar inflows, why is the price not shooting up yet? And Adam, you hit on it, right? There's sellers. Who knows who the sellers are? But it seems to me like there's some noise that's being taken out, whether that be market makers or exchanges. I mean, do you guys have any perspective on what's going on at the margin? If we're seeing these huge dollar inflows and this huge demand, and the supply is only this tiny fraction of the demand, what's going on?
Right. So I mean, another metric, Samson ran through a few metrics there that's interesting, is the remaining Bitcoin on major exchanges. And I guess it's like 1.7 million or something, and it's shrinking fast, basically. So
yeah,
as the ETF inflows are coming in, they're buying up Bitcoin, and of course, retail users are also buying up Bitcoin. The ETFs are putting it into custodians, the retail, some of them put it into cold storage. And another kind of sort of what I think is actually a distraction is people notice that there are quite a few shorts building up on the CME futures, but I believe that's just basis trading. So, they're collecting a yield on US dollars, and the way they do it is they buy Bitcoin in the ETF, use the Bitcoin they bought as collateral, the ETF as collateral on CME, and then shorting it, and then they get the funding rate, on a dated future, and there are sort of perpetual futures on the crypto exchanges. So it's the same trade, but just on a dated basis. I think it's pretty much neutral, just like lowers the cost of borrowing for whoever's, going along with the CME, right? It's a form of borrowing. You can use your portfolio collateral to buy now, pay later on a Bitcoin. So, you're thinking, well, I can pay for the rest of that, from my monthly income, and probably the price is lower now than in 3 months. So then you're willing to pay annualized, 6% or whatever the funding rate is over there. So I think that's neutral. I think the sellers are probably miners, like industry people with debts and lower profit margin than typical. So I think there's quite a bit of positive reflexivity in mining because they have to cover their power bills. So as soon as Bitcoin picks up a bit, they'll start to sell less because they won't need to sell as much, and so that will sort of accelerate an upwards, like a change kind of thing. They could hypothetically subtract the basis trading from the ETF inflows, but like I say, I think it's actually neutral. It doesn't mean anybody's naked short Bitcoin. That's a very dangerous thing. So Kerrisdale, who's infamously shorting MicroStrategy, and we kind of spectate a sport to see if they get blown out or not. Even they are actually long Bitcoin, so they're kind of doing a kind of arbitrage between Bitcoin and MicroStrategy's premium, which they think is too high. We'll see what the market thinks in due course. So I think it's just a kind of waiting game until maybe there's some people who are restructuring debt till they finish doing that, or to get a bit of an uptick in mining profitability from the price, and then I think it's off. So because you would think, well, why would miners be selling Bitcoin? Just wait, wait till later in the year. But the point is, and then you wouldn't have to sell as many to cover the same amount of whatever it is you need to cover, right? But I think the problem is that they have like monthly recurring costs, and they don't have a big US dollar cash buffer, right? They tend to like Bitcoin, and so they hoard Bitcoin when they can, and so unfortunately having to dip into it now. So don't know if I've seen any reports adding it up, but there are, of course, their quarterly financials, and some of the mining companies have more real-time metrics on their website with megawatts under management, number of petahash they're managing, that kind of thing, and sometimes the Bitcoin reserve balance. Everything that's been going down, so I think that's probably the bigger part.
Samson, you have thoughts on that, the reserve balance? It seems everybody has incentive to hold, and the exchanges, I would suspect, also have incentive to hold on to their balances. It seems a bit odd. Any thoughts on that?
Yeah, it does seem odd. I mean, it's hard to say what is causing the price to stagnate, because I think we all agree it should be going up right now. I think anything under 0.1 M is a joke at this point. But it could be miners selling. I don't really... No one can say for sure, but I would say there might be some coordinated effort too to also suppress the price. The price movements don't seem very organic right now. So it could be people are trying to intentionally keep the price low for ETF accumulation. So maybe they're doing trades that they're trying to minimize impact on the market as much as possible. You could also have people naked shorting, right? It's not unheard of. FTX sold Bitcoin that they didn't have. It could also be the case that some entities are selling Bitcoin they don't have, or maybe they're using paper to do it. I don't know. But it doesn't seem natural right now, and the price movements seem kind of weird. There was a spot, I think 2 weeks ago, where the price was just flat almost for like a good 10, 12 hours or something like that. It didn't even...
Literally, just flat.
Yeah. Someone is doing something, but you never know, right? But I think the point you made earlier that the plebs don't factor in, I don't think that's correct. If you look at GME or GameStop, the plebs can actually make a difference, right? The little guys can add up over time, and I think it's the same for Bitcoin. All the guys that are DCAing, price insensitive to Bitcoin's price at any level, they are going to make the difference. Hodlers only really tighten the coil because we're not actively participating in the market, right? We just take supply off the market. So we compress that coil down, but we don't make the price move. And I think the ETFs will make the price move because of those multiples. And this is also why I believe someone, market makers or somebody's trying to keep the price steady to accumulate. Because if you look at the 10 days ago mark where we're at 27 times supply, it doesn't make sense that we didn't see some Godzilla candle already, right? So it's just a matter of time. And if you look at the landscape of adoption, everything is trending towards number go up. Like if I ask you, in the next 5 to 10 years, do you think MicroStrategy will stop buying? What's your answer?
No.
No, right?
Yeah.
Is Tether going to stop buying for their treasury?
Yeah, no.
No, right? Are other public companies like Semler or Metaplanet going to stop appearing?
Yeah, no,
Probably
no,
not, right?
yeah, exactly.
And I think the other thing is the lending markets around Bitcoin are not yet matured, but they are getting there. So as we're seeing competition from different ETFs in different regions, it's heating up. So we're seeing Hong Kong offer in-kind create and redeem at the get-go, right? The US doesn't have that yet. In Australia, Monochrome launched theirs. I think VanEck has a feeder fund now, but the Monochrome one is very unique too. They're also trying to one-up Hong Kong. So they not only do they have in-kind create and redeem, they actually have secured some lending facilities. So people that want to borrow against their Bitcoin can put it into the ETF in kind and borrow at far more favorable rates than any other Bitcoin/crypto lending facility. So once that starts to kick up and get up to speed and people understand it and know about it, I think you'll see far fewer miners selling because they'll have access to dollar facilities to pay their bills. And that will change the entire playing field. Basically, my rule is no public company should ever be selling Bitcoin. They should be borrowing, right?
Right.
It doesn't make any sense that they're selling. So if you're a public miner, you should be putting Bitcoin in Monochrome and borrowing.
Right.
If you're assuming 60% median growth, it's okay to pay, 3-4% for a loan.
Right. Yeah, absolutely. If you think the median growth is 60%, and you're paying 3 or 4% for the loan, yeah, I mean it's a no-brainer. Or 65 bips for convertible bonds, or whatever those play out to.
Wait. I have more too.
Go. Oh yeah, hit it. Give it to us.
There's also Debify, which is a new offering from the guys that created HODL HODL, and they have HODL HODL Lend as well. But Debify is an institutional grade lending platform. It's peer-to-peer institutional lending. And I think once that picks up steam and people understand it, they'll also change the landscape of Bitcoin as well. Basically, in the future, no one will ever sell again because they can borrow against their Bitcoin. And that's just been a problem that hasn't been fully solved yet. But if you look at it, Bitcoin is pristine collateral. And the more people understand that, whether they're corporations or nation states, the faster we get to the Godzilla and Omega candles.
Yeah, it's the best collateral on the planet. Right. And if it's custodied appropriately, you can always get it, find it. Like it is the best collateral, most transparent collateral on the planet.
Yeah.
Well,
I mean,
go ahead, Adam.
Actually, yeah, I think actually the other factors. So we were talking about, historical average compound growth rate on Bitcoin, and I think this last halving cycle was kind of suppressed by world events, right? COVID, quantitative easing, supply chain, lots of things going wrong, right? Downturn in supply chains, economy worse. And so there's really a lot of things that went wrong there. In crypto things too, the DeFi failures, Three Arrows Capital, Celsius, BlockFi, there's a whole slew of them. And they were, opaque leverage. So, people were doing recursive things. So the actual leverage was really, really high and not clear. And so I think, as soon as a few things failed, it caused contagion to flow through. So that, knocked out some other companies that were exposed. I mean, BlockFi most infamously, because the poor guys, they got into trouble. They got a buyout from FTX, and then FTX took them down again, right? So it's super bad luck. But, those kinds of contagion were happening in the DeFi world too. So I think a lot of that DeFi was a bit kind of, I guess Alan Farrington would say, where is the yield? Who's borrowing the money? And nobody's borrowing the money. It's based on ICOs or something, right? So there's a lot of exuberance and silliness going on in there, but it did, ultimately impact the market with bankruptcies, with, FTX failing, and VCs losing confidence, or the high order, because we're immersed in the space, right? We're looking at MicroStrategy, we're looking at Bitcoin, but for general VCs, the macro is bad, so it's harder for them to raise funds. And FTX fails, it's kind of like Mt. Gox, right? There's going to be a quarter or two where they're thinking, well, did Bitcoin fail? What's the implication of this? So I think all of that noise basically subdued the last cycle, and I guess you could see that a bit in the fact that we had a third all-time high right before the halving, which is not something you typically see, right? So, from that point of view, I think it's another reason you can have a big upswing, which is, I think, we're not where we would have been without all that noise. And most of that noise wasn't really, noise, it was like dramatic and painful for a lot of people in the world, right? So it's actually a macroeconomic effect. But nevertheless, most of those negative headwinds shouldn't really be bad for Bitcoin. If Bitcoin is a hedge from geopolitical uncertainty, quantitative easing, inflation, like this should be a good time for Bitcoin, right? And finally gold starts to pick up a bit. So I think we've got some ground to recapture as a starting point, even before this cycle. So in my opinion, we should have been over 100,000, like in the
Before
last
the halving.
cycle, right? Yeah, exactly.
Yeah.
And I took a bet accordingly, but I was right directionally, but didn't quite make it. Yeah.
Well, even Michael Burry was wrong before he was right. So it's just a matter of time.
Yeah, just a matter of time. Yeah, absolutely. Well, I think you guys both bring up some really good points on the DeFi. There's always bad actors, right? So that's always going to happen. We're going to have to deal with it again, right? There are going to be more companies that are going to rehypothecate capital and fail, and hopefully there are more guide rails to prevent that from happening in the future. And I suspect, because of the amount of failures that we saw in this last cycle, there's probably going to be a little bit of a delayed adoption for some of those, lending type solutions. But, to the extent that we have corporations and public companies that are using these tools and products as opposed to, small, $100,000 or $50,000 loans, you're looking at multiple $1 million loans. Maybe the size and scale can be a little bit more appropriate. But yeah, go ahead.
I would have, I'm a bit surprised at the relatively few number of public companies that have, followed MicroStrategy's lead. Now, of course, there are some companies, with Bitcoin on the balance sheet, Tesla, Block, MetaPlanet, a small new Japanese public company. But, Michael Saylor's been offering people a masterclass in how to do this and running annual, institutional conference to explain it to people with like the accounting playbook and the economics. And there's not, a dozen people following the playbook. It's, as Samson was saying, if the compound annual or the median annual is like 60%, a few years ago I looked at the previous decade. At that point, it literally slightly more than doubled every year in the previous decade, right? So, if you're looking at those kind of compound rates, and you could, as a corporation, you can borrow, perhaps long term without, against the business cash flow, without even like, direct collateral on the Bitcoin you've bought. That's a great deal, right? And, I've got to think that the asset price inflation is actually double digits now and for the next decade, probably, in my opinion.
I would say the CPI is not real, right? They keep pulling things out of it to make it look good. That's if you don't do anything, you don't have a house or a car, or you don't eat, then yeah, inflation is great, but it's not a real metric anymore, right? But that ties into the election cycle too. I think the money printer is going to start up again and aggressively in the last half of this year, just ahead of the election.
Yeah, money's difficult. For a lot of my friends and, non-coiners, money is hard. There's not a lot of hope. Companies are challenged to raise capital. Not a lot of companies are going IPO. These are things, companies aren't hiring people, despite what the jobs reports say, apparently. And yeah, it's challenging. I suspect you're absolutely right. People are going to want to feel the ease on money, I would suspect, going into an election cycle.
Yeah, I would say there's also a barrier too. If you think of the question like, why aren't there more MicroStrategies? You have to go through a series of steps to get there, right? First is you have to understand Bitcoin. Then you have to figure out how to get Bitcoin, and then how to keep it safe. And there are hurdles there. Just like individuals are lazy. They don't want to do the work of self-custody. They just keep it on an exchange. It's the same for companies. They don't want to have to go and find a custodian and do some research, right? It's not easy. So you kind of need someone to guide them there. But I think it is still hard to figure out which custodian you want to use. And then most people, they just analyze based off headlines and they think, oh, okay, it's all a scam. But that's all changing, right? With the discourse change in the political arena, I think that will start to affect it. I think if banks can custody Bitcoin, that will be a big game changer because every corporation has a bank. Not every corporation has a Bitcoin custodian that they just call up.
True.
So that lowering of that barrier to entry will change a lot, especially if banks can custody. And I think that's, being fought over now, and it could be a key issue in the next election as well in the U.S. But I would say nation state adoption will accelerate with the ETFs because the ETFs make it much easier. If you look at El Salvador as an example, they didn't self-custody until I think a couple months ago. They announced that they're self-custodying, but they were using a custodian at first. But for the nation states, there is that same barrier as with a corporation, and that barrier is now removed with the ETFs because most central banks can buy stocks. If you look at the Swiss central bank, the reason why the Swiss franc is so strong right now is because they bought a lot of tech stocks, thinking they want to weaken the Swiss franc. Maybe Adam can speak to a bit of this, but they're up massively, and the Swiss franc got stronger. But they can also buy the ETF because now it's just as easy as buying a stock.
Yeah,
Right.
Actually, my mother is from Switzerland. I spent time as a kid, going there in the summer holidays and things, and so. I remember looking at the Swiss franc exchange rate, and it's just like keeps winning year after year after year. So, it's now massively stronger than back then. But it's gone above par with the US dollar. It's about like 1.12 now. It's a problem for like Swiss exports. Swiss watches, Swiss engineering. That makes it difficult. Your products become expensive, so they were trying to push it down by spending it, and they were too good at being a hedge fund, basically. And the other interesting thing about Switzerland is it was the last major currency to go off the gold standard. It's like shockingly recent, like late 90s or something. Everybody thinks like, well, the gold standard was gone like 1971, 1930 or whatever, but no, the Swiss franc was like recent, right? And so they have a direct form of democracy where you can collect some thousands of votes and then force a referendum to overturn a government rule or to, create a new rule, and they basically have to follow it, right? So they had a referendum not so long ago that didn't quite pass to bring some gold back to it. Didn't quite pass. But that's interesting, and the younger generation's now saying, well, we should have a referendum in Switzerland to move to a Bitcoin standard instead, right? To like. It's just like partial backing, right? It's government reserves in gold, which they used to have. I think before they closed it down in the 90s, they had 20% gold backing for the Swiss franc kind of thing. And then that got removed. But it's very recent, right, compared to other countries. So, a Bitcoin version of that will be, let's have some percentage of Bitcoin backing or Bitcoin and gold or something. So I think that'd be cool if they could get that through as a referendum. Yeah, I think another thing for the company, so we were talking about companies adopting the MicroStrategy playbook, public companies. There's something positive development is the FASB stuff, which is the accounting standards. You guys probably track that. Maybe you want to explain it for the audience.
Yeah, the FASB fair value accounting is really interesting. I think we've talked about this quite a bit on this is part of the reflexive flywheel. I mean, currently MicroStrategy cannot take the gains that they experience on their Bitcoin balance sheet in their earnings. However, the change in the new fair value accounting standards make it so any gains that MicroStrategy experiences during a quarter gets added directly to the bottom line of net income, which would flow through to earnings per share. So if you go look back at MicroStrategy's last 12 quarterly earning per share, they've all been negative because they've had to mark down their Bitcoin for any negative movements that it's had during that period. But not been able to account for any positive movements to the upside. So I think that's roughly, I think I was calculating like $300 or $400 of earnings per share miss that they haven't been able to account for over the last 3 years, which should that come in to fruition in 2025, that should be a really, really exciting event. But it also, it allows for future financial strength, right? Because as the earnings per share increases for many of these companies that maybe have had negative earnings per share the last couple of quarters because of whatever financial reasons, that allows them to get more higher inclusion in market cap weighted indices, which allows for increase in share price and shareholder value, which every executive should be pushing for, kind of increased shareholder value. And I think this is a really good segue because, everybody's here. We want to talk about MicroStrategy because, everybody on this screen is a MicroStrategy holder. We've talked about MicroStrategy quite a bit. I think we all can say that we like the stock, and it's fun and exciting. And you guys are both particularly interesting because you work for private Bitcoin development companies, basically. And with MicroStrategy announcing that they are a publicly traded Bitcoin development company, and they also happen to hold 1% of the Bitcoin holdings, or 1% of the Bitcoin supply forever, and they likely will be acquiring more. I'd be really curious to get your perspective on how you see MicroStrategy developing as a Bitcoin development company over the next 10 years or 15 years, recognizing that Bitcoin is beyond just a store of value, potentially a medium of exchange. And, Bitcoin is a monetary language that is going to be continuously developing globally. And what might that look like for some people that haven't been able to see this as a technology beyond a commodity?
Adam, you go.
Well, I mean, I think they're just gonna keep buying Bitcoin, to the using debt and convertible notes, and they've been doing some convertible notes recently. They did some at the market selling in November and December last year. I think it's about 600 million a month to buy Bitcoin. That was actually slightly anti-dilutive in Bitcoin per share, which is the metric that we want to care about. And then the other metric people are looking at with MicroStrategy is the market cap multiple to the Bitcoin on a balance sheet. And of course, there are different ways to value a company in terms of, trying to guess or use metrics from the sector to guess what the enterprise value of the strategy businesses as compared with the debt, so some leverage on the Bitcoin. So I tend to simplify it and say, well, the enterprise value, let's call that 3 billion, and it offsets the debt. And then you're looking at, roughly 2 times the Bitcoin on balance sheet. Kerasteel didn't like that multiple, but we'll see who's right in the long term. And I think, the way I was looking at it is, MicroStrategy is clearly trying to accumulate more Bitcoin, and share prices are based on, the future, where you think it's going in the next decade, right? And so, the question is, can they double the Bitcoin per share, in the next decade? And maybe they can, right? It just depends on the price of Bitcoin and the convertible notes they can sell, the terms on it. They're clearly getting very low interest, very long-term convertible notes and debts, which is great because if they have to refinance or convert these in 8 years or something, that's very far in the future in Bitcoin terms. So and of course the other factor is what will the next guy pay? What will the market pay for it? So
it's incredibly compelling. Right. I think the MicroStrategy right now, as of today, is trading at $1,469, $26 billion market cap. And they have more Bitcoin than any other publicly traded company. Actually, they have more Bitcoin I think they have 2 times the amount of Bitcoin than all of the other publicly traded companies combined.
2.25 to be exact.
Right.
Yeah. I don't think anyone will ever catch up to them. It's almost an impossibility at that point. So good for them. No competition.
Well,
right. Yeah.
I mean, you can say that the metric that counts is, as an investor, right, you're buying a small percentage of the company. So the metric that counts is Bitcoin per share and the trajectory of the Bitcoin per share. But, they have, even amongst public companies, they have, generally a pretty good setup, right? They've got a very stable business in the strategy business that is throwing off cash flow to pay interest on these loans. And, they seem to be able to place, 500 million, 800 million at a time into new debt and new convertible notes at very favorable terms. And I think you guys were explaining some kind of arbitrage for the people that buy the bonds, and they might take a short position in MicroStrategy, but really they are just hedging the convertibility as that gets closer to maturity. So there are all these kind of interesting arbitrage things that people are doing when they're buying the bonds. They want this kind of corporate bond exposure. They can't buy Bitcoin, but they can buy that. And so, they have a position. So, there could be other companies that could do that, other companies with steady cash flow. But I think the concentration of, market cap to Bitcoin is an interesting one, because for another company to match that ratio, they'd basically have to have a much smaller market cap, right? Otherwise, they'd have trouble catching up to the 2x approximately, right? So one of the new ones that was mentioned, there's one in the US, right? This medical company.
SMLR, Similar Scientific. Yeah,
that's the one. Yeah, so I don't actually know the multiples on that, but the new one in Japan, Metaplanet, is got quite a high multiple at the moment, but it's very early in its cycle, so we'll see where that where that stabilizes. And it's a small cap, right? It's like market cap is around 90, $100 million market cap. So if they could accumulate, I don't know, $50 million worth of Bitcoin, I think they currently have about 10. That could get them into a similar kind of ballpark. But that company doesn't have like any appreciable other revenue, so it doesn't have the revenue dynamic, right? But then again, it is Japan, and the interest rates on the Japanese yen are infamously low, right? So perhaps they can borrow at extremely low rates anyway.
I think this topic of market cap is one of my favorite topics, because it's already come up earlier in this conversation as well, is that market cap is synthetic, right? It's what's trading at the margin multiplied by the supply. And if everybody decides to stop selling at the same time, and then there's no supply left, but the demand is still the same, then the price goes up. And the same relationship occurs in the stock market as well. I mean, you brought up stocks are forward looking. Nvidia is trading at $3.3 trillion today, which is 3 times Bitcoin's market cap. I think MicroStrategy currently today is priced at, 1.8 or 2 times, around 2 times multiple, let's just say. So it's pricing in like $120,000 Bitcoin price. I would suspect, that people are going to start pricing in a much higher Bitcoin price once we hit an inflation adjusted all-time high. And if we see an Omega or Godzilla candle, I think things could get wonky and out of place really quickly if the velocity is to the extent that we think it might be here, right?
Well, the thing is, you don't need a lot of money to make Bitcoin price go up. Like, people think, well, if you have $1 million Bitcoin, then you need this much capital to come in. But that's not how it works, right? People just have to decide, this is how much I'm willing to pay. And this is why the price insensitive buyers are crucial to this, because plebs and Bitcoiners don't care what the price of Bitcoin is. Bitcoin might be the only asset that people are happy with when the price goes down and up, because when it's down, you get more. When it's up, you're happy, right? So it's a really unique place to be in. But yeah, I think there are so many tailwinds for Bitcoin at this time that we just talked about. But at the same time, the legacy financial system has these massive headwinds, right? If you look at U.S. debt, it's spiraling out of control. In the next decade, they're going to pay another $12.4 trillion simply on interest alone, because compounding interest is magical. But the entire system is broken. We were talking about Japan a bit with Metaplanet that Adam mentioned. The yen is devaluating rapidly against the dollar, right? They're trying to keep it down, but every single move they make just fails. They push it down with some bond sale or something, or US Treasury sale, and then it comes right back up. So it's almost like nothing is working. So you can look at the legacy financial system holistically and just see it's all breaking down. So it's just a matter of when we hit that inflection point at which people realize, okay, it really is broken and we need Bitcoin. Either you want Bitcoin to store your money in, or you want Bitcoin as collateral, or you like Bitcoin and you see it has potential. But any of those reasons is enough to trigger that Omega candle, because it's just people deciding what they want to pay for Bitcoin. That's it.
People deciding what, yeah. Go ahead, Brian. Yeah.
Sure, yeah. And just to bring it back to MicroStrategy just a tad bit. And by the way, I've loved a lot of things that have been said so far, whether it's, the CPI being fake, which that also includes GDP and unemployment. These numbers are very extremely manipulated, or the history of the gold franc there. But to slightly pivot back to MicroStrategy's actual operational business as a Bitcoin development company, separate from, going out into the market and buying more Bitcoin, do either of you, Adam or Samson, think that there is a commercial interest, a B2B type software, like the way I've been describing it through like Twitter posts has been saying like a Sparrow type software for B2B, where corporations can see their stack, they can see their transactions and all of those things. But that's just one example, right, of what could be done from a software business development company. So do either of you see any expansion in the actual Bitcoin related software development space?
I mean, I think MicroStrategy has historically been in this kind of business intelligence sector, but they have some, like it's early in their development cycle because like software development takes time to bring new products to market. But they do have some initial enterprise offerings in the Bitcoin space, like integration into intranet software to do Bitcoin related micropayments and things like that. So, presumably they will look to expand that and maybe, weave some Bitcoin analytics into the business intelligence too. I mean, it's speculative. I don't know, what their forward-looking product plans are, but we can see what they've said on their quarterly reports about, their Bitcoin-related product offerings now. Presumably they'll look to expand on that, to sort of get more synergy with the Bitcoin development company theme.
Yeah, when they first announced it, I was expecting that they'll be doing Bitcoin protocol development or at least something like working on side chains, maybe on Liquid or Lightning or something to scale Bitcoin's usage. It sounds like they're just doing more like apps, like the orange check app, or I don't know if it's app, but the orange check mark
Orange
thing,
check.
the DID.
Yep.
And I don't know, maybe I'm too skeptical, but I don't see that much value, enterprise value and economic value being created by that. It's interesting, but it's not something that's going to change the face of MicroStrategy, and it's not going to add to the bottom line. I think Saylor is quite cautious on what he does because he's in a very interesting position, right? He is a head of the biggest Bitcoin-backed public company right now, so I don't think he's going to be working on silent payments or anything like that, but it would be interesting if he did. But I would like to see MicroStrategy do more protocol level work, right? And I think there is a discussion about ossification, and he's said publicly that he doesn't think there should be any changes, but software is a living organism. You can't stop maintaining software. So some work on that front could be interesting from MicroStrategy because it would contribute directly to the protocol. And I think the net effect would be positive for their company value. But, there's a lot of interesting things that he could do. And I think a lot of those interesting things that could be done are actually being done at Blockstream, right? Like, I think tokenization, the Blockstream mining node is interesting. I think Stoker launched their C MicroStrategy, MSTR, which is tokenized MicroStrategy shares that can be traded 24/7. I think a lot of these things can be... Yeah,
that's pretty topical, right? Because it's literally MicroStrategy shares.
Yeah, and it actually makes the trading of MicroStrategy stock much more censorship resilient. So you could still have a scenario whereby, I don't know, Robinhood pauses trading of MicroStrategy, right? But now you have CMSTR, which is tokenized on Liquid and it can't be stopped. So if I was Saylor, I would be investing into things like tokenizing on Liquid and creating these peer-to-peer trading markets with a bearer instrument to prevent the possibility of Robinhood preventing trading of MicroStrategy down the road. This is what I find interesting personally. Adam, do you have any thoughts on that?
Yeah, well, I mean, I arrived at the idea of trading MicroStrategy. We did this for a few years as a swing trade against Bitcoin. So I was actually sort of pricing MicroStrategy in Bitcoin. So, you talked about the multiple, but to price it in Bitcoin is take the share price and divide it by the Bitcoin price, and there's your Bitcoin basis price for MicroStrategy. And so I would, use Bitcoin to buy MicroStrategy when it was cheap in Bitcoin terms and sell it back to Bitcoin when it was, when it recovered. And there's an enormous swing in that. It's moved like 2.5, maybe 3 times in the, actually, even since the ETF launch, right after the ETF launch, So the price metric I use is like Bitcoin price per 100 MicroStrategy shares, because MicroStrategy shares are cheaper than Bitcoin, and it's hard to like deal with fractions of Bitcoin, right? So if you do 100 MicroStrategy shares, which is coincidentally or not the unit for the token, so it's 100 MicroStrategy shares, it's the MSTR. Like let's say Q4 last year when I was buying, it was like 1.3 Bitcoin per 100 shares, and that had grown to, I don't know, like probably 1.4, 1.5 just before, like before the ETF this year, January and so on. And then once the ETFs were approved, there was a lot of MicroStrategy selling. So I think a lot of people reallocated, like they were in MicroStrategy because it was a proxy for Bitcoin, and now they had a Bitcoin ETF, and so they sold the MicroStrategy and put it into the ETF. And they really hurt the price. Like it was, it's usually very correlated with Bitcoin price, but they pushed it below the kind of correlated norm, all the way down to 1.1 Bitcoin per 100 MicroStrategy. And, there was some discussion in the market. Some people were saying, well, like it's game over for MicroStrategy. It doesn't have any relevance now that you can buy Bitcoin. And I think, everybody in this call thinks that was nonsense, right? So, and it was, right? So it's, it's trading at about 2.3 Bitcoin per 100 MicroStrategy shares now, just a few months later, with price a little higher, right? So as a kind of Bitcoin swing trade, you are able to, take advantage of movements where, perhaps the smaller pool of investors trading MicroStrategy are perhaps a little bit more susceptible to Bloomberg news flow, which, where the Bitcoiners are more kind of, Berkshire Hathaway, it's cheap, buy more kind of mentality. Perhaps they're more likely to kind of, oh, that's bad, and they sell it, right? And it's a smaller cap too. Now, the challenge for that, trading that, coming from Europe is, the US market is just before the European close. So you're like trading in the last like 2.5 hours of the day. If you're selling like European ETF, Bitcoin ETFs against MicroStrategy shares, because you've got to get them on the same platform somehow, right? So, something like, and of course, then it's, even when it is open, if you're trading against, so basically you have to, sell a Bitcoin ETF, get the dollars, and then buy MicroStrategy and hope the price doesn't slip too much while you're doing that, and then do the opposite when you're trading back. And it's only during market hours and not on weekends. So the CMSTR is, I think, probably the only place you can trade MicroStrategy 24/7 globally. Because you have to enroll, right? So it's got, similar kind of share restrictions as signing up for E-Trade or something like that, right? Depending on your jurisdiction. But once you have it, and then the other novel thing is it's like literally the market pair is Bitcoin. So there's a side swap order book, which is a kind of non-custodial, it's a central order book, but it's non-custodial, and the price is expressed in Bitcoin. So you're literally doing a Bitcoin to MicroStrategy direct trade. So it's kind of more efficient. There's 10 basis point, and there's no slippage while you're, selling ETFs and then doing 2 trades each time. And it's 24/7, right? So you can do it all day. So I think, it's early days for the market. It's only been going for a few weeks, but, it might be a vehicle to get a kind of 24/7 price discovery, outside of the main market hours for how MicroStrategy should, vary with Bitcoin. It tends to fall a little faster when Bitcoin falls and rise a bit faster when Bitcoin rises, but there are other effects, like post ETF, it got pushed off that track for a short period. Occasionally, you'll just get something going on in the market, there's something MicroStrategy specific, or, that affects share buying sentiment more than Bitcoin sentiment, and that will reflect a kind of discrepancy there. So it's an interesting trade, and made a little bit more efficient by being able to do it directly and trade it 24/7. So yeah, I like it. And it like feels more like a Bitcoin experience, right? You've got it in a liquid wallet, so like a wallet like Aqua or SideSwap or Green, you can have the Bitcoin in there, and the MicroStrategy in there and transact it. So you can transact CMSTR down to 1/10,000th part, so it's about 100th of a MicroStrategy shares, kind of fractional shares. It's worth about $15. You quoted like $14.96 a minute ago, so that's the kind of minimum transfer size like that. And the other curious thing about this CMSTR structure, it's a Luxembourg securitization vehicle operated by Stocker. which is licensed in Europe to do that kind of thing, is that it has some ETF-like mechanics, which is you can, it's just as a user or a trader, you can do an in-kind create. So subject to a minimum of $150,000, which is, what about 100 shares? You can transfer those in to Stocker, pay a service fee, and get one more unit of CMSTR. So if you see that, the shares are cheaper on Interactive Broker or E-Trade, wherever you're doing it, they'll give you the instructions to transfer the securities. And then, after that process is done, you'll get another unit CMSTR. So you could sort of complete the arbitrage loop yourself. And you can do the same on the way out, right? So you can say, buy up some below market CMSTR on a side swap order book, build it up to $150,000, get the securities transferred out, like the CMSTR unit would be deleted, and you'd get the securities by a kind of redemption in kind in your securities account or whichever brokerage you're using, and then you could take that arbitrage. So kind of interesting because it keeps those markets in line that people can directly move, other than just trading it, because there's the same number of shares under it, they can take matters into their own hand and like arbitrage it and rebalance the arbitrage if there's a persistent difference. So some curious like ETF like behavior there, except it's not authorized participants. It's anybody with 150,000 or 100 MicroStrategy shares roughly can get into this kind of arbitrage opportunity if it exists.
What's the AUM right now for CMSTR?
It had the kind of Luxembourg minimum seeding in these things is 5 million euros, but I think it's around $6 million now, so it's gone up a bit. It's 4,150 shares in it. There's a kind of transparency page so you can see the current float. And there's a little bit of early trading. There's probably a few dozen individual traders in there with who bought some of the seed shares and start trading them backwards and forwards.
I mean, it's such a fascinating concept, right? If I hold Apple stock in my brokerage account, I can't do anything except hold Apple stock. But if I held CMSTR, and it's tradable 24/7, and you can side swap between Bitcoin and CMSTR. And if you went to a dinner with a friend that also holds CMSTR, and they paid for dinner, and you wanted to pay them, you could send them CMSTR via the wallet. So it like creates another benefit of actually holding shares. Like utility value, which like stock has never had utility value except from like store of value, and that is mind blowing. I mean, that's where the future's going: 24/7 trading, securitized.
Right. And you could even do an OTC trade, right? You could hand the guy $30 and give you 2 100ths of a MicroStrategy share, right? Like right on the fly.
Yeah. You should go dinner with Sailor and then settle in CMSTR.
CMSTR, yeah.
I love it. Well, it's exciting. There's a lot of potential development. Samson, you brought up lending a little bit earlier. I mean, the same position holds for MicroStrategy, right? If you're holding 214,000 Bitcoin and of the best collateral in the world, if you wanted to take out a loan on that Bitcoin to make an acquisition or facilitate development of business, the incentive structure is there to, one, hire the best talent in the world, because the equity programs and the potential to get paid in Bitcoin in the future, or whatever that might be, a lot of incentive to hire really good talent. A lot of people want to work there and develop the future ecosystem. And then you have this ability to leverage capital and earn a yield on that capital, whether that be via acquisition or business development. And that's probably going to happen over the next 20 years, right? Like the next 4 years, you're right, there's probably going to be pretty quiet on what goes on, but there's going to be some strategic chess moves that I would suspect are being made. But Bitcoin is a technology. And I think I work in traditional finance, and most of the traditional finance world doesn't see it as a technology yet. And they see it just purely as a commodity. And it's an exciting future of where this could potentially go.
Yeah, I think Sailor should buy energy companies, buy companies like with a hydro dam or something, and just mine Bitcoin for free.
Yeah, I mean, it's an interesting debate where you see, people can be interested in Bitcoin for different reasons, and it's all good, right? And so, some people are doing remittances with it, and that's their use case, right? And other people looking at it as an investment, as an asset class. and or as a censorship resistant payment or an unseizable form of savings. So I think the reality is that those are complementary, right? That the fact that people can use it as an unseizable store of value, or they can transact uncensorably, or they can do low cost international remittances without permission, or price gouging by Western Union or whoever's doing the remittance, is actually part of the value proposition that makes it makes it a savings vehicle, right, or an asset. So I do think it's the case that Bitcoin as gold only would actually be, a very successful thing. But I think it becomes even more successful if you have both elements to it. And I guess that's true for physical gold too, right? It wasn't just, government reserves, but people were actually transacting and doing commerce with it. And, there are countries around the world where it's very prevalent to have gold jewelry as a personal savings, right? It's very popular in India and some other countries. So, I think in the West, if people have any gold, a little bit of jewelry, but that's not really a saving in the way they look at it. But, they might have some gold ETFs in their portfolio, where in other countries it's much more hands-on. It's physical gold that they're storing. So I think that's there with Bitcoin, and that you get, transactional use cases, sense resistance features, and also, we shouldn't, like you said, it's a technology. I think the other interesting, very critical thing is that Bitcoin is an open network, and open networks are much better at having rapid innovation. So a long tail of financial instruments around it, of startups building, cool technology, where, a financial instrument that is, in an ETF or issued by an underwriter or something, you're not going to be able to innovate on that, right? I mean, you need to be a licensed financial institution to do much with it at all, right? So the idea that some programmers could make something cool on it is kind of very remote. Of course, there are fintech startups and things, but it's a different ballgame to the kind of rapid, fast evolving open network kind of thing. So I think that kind of turbocharges Bitcoin as well.
Yeah, it's a lot of things to be happy and excited about. A lot of things developing, and I work in the insurance and reinsurance world, so it's really interesting to me. I see, I have a finance background. I believe in Markowitz portfolio theory, and having different Sharpe ratios, adding different assets to your portfolio helps meet future liabilities. And I'm seeing this challenge in the entire industry where all of these insurance companies have huge liabilities, and they're consistently not able to meet these liabilities and not be able to afford their reinsurance costs and their cost of capital over time into the future. And it's one of these things that the entire industry hasn't really adapted to Bitcoin, or really thought about Bitcoin as an asset class. And it's really interesting to me that you see all of these different capital allocators that are just blind to some of the technology and the concepts around the asset class too, which is really interesting.
Well, generally it takes 2 to 3 years for the world at large to understand something. I would say the key point there was the launch of the ETF. The world will understand within the next 2 to 3 years, and that's not far away. It's like a year and a half before mass understanding.
Yeah, it's a adapt or die type of mass understanding.
Right. I mean, it's, even for a company, it's a huge advantage having the harder money. So I think Safety Moose basically saying this, that, it's the advantages are so extreme for having, the better Sharpe ratio asset, the better money, the harder money, that, people who don't adopt it are, they're suffering capital reallocation to people who do. So, they will adapt quickly, or, their kind of weighting in the market will be de-weighted, right? So I think it kind of fixes itself, but I do think, it's not like we shouldn't get critical, look down on people. It's just that it's still early, right? We're so immersed in it. We're like, this is obvious. Why aren't you doing it? But to the wider world, it's still super early, and we're at the bleeding edge, right? Even though we've been in it for longer, looking at it and thinking, what's taking you guys so long? Why don't you allocate it in your managed fund? Why are you buying these bonds that are losing you money in real terms, etc.? Well, there are regulatory reasons, and it's still early, right? They're still wrapping their head around, or is it a long-term credible asset class? So, that also is what makes, like, preserves the opportunity and the upside, right? If everybody got it today, the market cap would be, $100 trillion or something, right? And then we'd be closer to the top of the S curve, so the opportunity would be gone. So the fact that we're still early is the opportunity. So I think you probably don't want it to get adopted too fast as well, right? Because this is an opportunity for individuals to get exposure before the institutions, and that's pretty rare in the world to have that opportunity, because most kind of high growth stocks, like pre-IPO, Google, Facebook, all this kind of stuff, right? It's just out of reach to the average person.
That's
You just
why
don't
I
have
came up with
regulatory
Max.
access.
Spain.
That's why I came up with Max Payne. Yeah, you got it. Because that is the ideal situation, right? That everyone gets to slowly get the Bitcoin and slowly understand it. But the Max Payne theory is that 7 billion plus people are not going to get on board, and they're going to be status quo while the rich get in very quickly, well, within the next year.
It might be helpful to give a quick rundown of the Max Payne concept.
Sure. So, I mean, the Omega Candle is in a way sort of a chaos theory element to the puzzle. So Max Payne is just the most painful thing for the most number of people is the most likely outcome. And the most painful thing for the world is that they miss out on Bitcoin, which it seems like it is likely going to be that way, because the people that are aware of what's happening, Adam's alluding to, we are on the cutting edge. We see everything. We know what MicroStrategy is doing. We know similar. 99% of people on the planet don't know any of this stuff, and they probably don't know about Bitcoin as much as we do. So they're just going to miss it. They'll miss the opportunity to buy Bitcoin at 63 now. It's like a 64. It's like a steal now, right? Or 65, whatever. Anything below 0.1 is a steal, but they're going to miss that. They'll probably come in, I don't know, when we reach gold parity. So somewhere like 300, 400K is where we reach parity with gold. And at that point, it's really just the Veblen effect, where you understand that Bitcoin is valuable because it is valuable, but no one's going to benefit from buying it at that threshold. They'll benefit from buying it now, but not there.
I mean, I personally think that the reaching parity with gold is something that could happen in this cycle, plus or minus. That event in itself is meaningful to a lot of people who have gold ETF positions. I would say that people who invest in understanding gold should like Bitcoin and vice versa, right? But nevertheless, that might cause a rapid reallocation from gold into Bitcoin, and a second kind of tier of validation, right? That the guys that have been talking about Bitcoin on financial news shows for years are suddenly vindicated that Bitcoin surpassed gold as a store of value. Peter Schiff is going to look pretty silly, and other naysayers, right? And so, and it's an eye-opening metric, an eye-opening milestone for people in the investment world who are doing capital allocation. So that could cause some. It's kind of another Veblen thing, right? That the price being higher gives people confidence that that's going to continue, or they reached a metric, so now they start to believe more, that kind of thing.
But gold in itself is sort of a psychological anchor point, right? If you take your average person in the world that doesn't really know much about financial markets, bonds, lending, anything, they know gold is valuable. So if you just tell them a few words, Bitcoin is more valuable than gold, that is enough for them to understand Bitcoin, right? They don't need to understand the 21 million supply cap. They don't need to understand that it's decentralized, that you can run a node, you can validate yourself. All that stuff is good, but they don't need to understand that to understand the value of Bitcoin, because value is completely subjective, right? If you think something is valuable, it is valuable. And when you reach that gold threshold, it is that simple. Like, this is valuable because it's as valuable or more valuable than this other thing that's been valuable for thousands of years.
Right. It's a threshold. Once it gets above the threshold, I frequently, when I orange pill my friends and family, I frequently bring up that it's the 9th largest asset in the world, and nobody conceptually understands that. I'm surprised frequently about the number of people that don't know that it's a $1.3 trillion asset, right? It's the ninth largest, I guess, investable asset in the world. Aside, like leaving real estate and fine art and stuff out of it. But yeah, it's incredibly fascinating. And I think that another metric that I think might tip the scales a little bit is I think the median US home price is like 420,000. And I think if that starts hitting mainstream media, right, the Bitcoin is now worth more than the median US home price. I think some people might freak out, and I think that might trigger some light bulbs. Like right now, you compare it; it's worth less than a Ford F-150. Everybody can afford a Ford F-150, but conceptually worth more than a house or shelter. I think people start to think about it maybe a little bit differently.
Unit bias is a factor. So, already in the past, Bitcoin has been struggling with at times. The assumption of newcomers, even like programmers and technical people, that Bitcoin's too expensive, I can't afford a whole Bitcoin. Like, well, okay, you can buy a fraction of a Bitcoin, right? And so, as we get towards the, 1 million per Bitcoin target, that might start to kick in more. So I think probably somewhere along the way, you need to find the market will discover a better way to explain to people that, you don't have to buy a whole Bitcoin. I mean, actually, the ETF units are all over the map. They all seem to have a different amount. I don't know why. You'd think they'd pick like, I don't know, like 1,000 for the Bitcoin as a unit or something, but they're all different. And so you have to like rebase them so we can figure it out.
Yeah, but I don't think it's that important to tell people you can buy a fraction of a Bitcoin. It's more important to tell them you can buy a house, right? It's just easier to understand. You can already buy a car. 1 BTC equals 1 car, and soon 1 BTC equals 1 house.
Yeah, the unit comparison would be a lot easier to comprehend. Yeah.
Well, funny. I mean, I think it is actually an interesting comment. I haven't heard that comment before, but I think it resonates because it kind of communicates that Bitcoin is in the same category, the kind of store of value, and of course real estate has been overused as a store of value. So that tells people that, well, maybe you could invest in Bitcoin instead of, or as an alternative to buying an apartment to rent out or something like that, which is the kind of common investment strategy that's pretty common in Malta, for example. People will try to do their savings, they will try to buy an apartment over the years, or get it ready to rent out, or plan ahead like that. So they'll put investments into real estate.
The interesting part there is just the cultural norms and real estate. So in China, it is a cultural norm to buy an apartment or a house before you get married, right? So if this catches on, 1 BTC equals 1 house, then you have to buy 1 Bitcoin before you get married. So that's a billion people trying to buy 1 Bitcoin. Let's see what happens.
Yeah, that would be interesting.
Well, I mean, another kind of interesting data point is there are some on-chain metrics about, the estimated number of people who hold Bitcoin in general, like I guess 100 million or something, and then, they're imperfect metrics because some people are holding on exchange or what have you. But, it's estimate like recently Bitcoin crossed 1 million people with 1 Bitcoin in an address, right? So it's like, there's 1 million whole coiners. And so, my thinking was, it's like, I wonder when we'll get to 10 million whole coiners. And I realized, that's probably not going to be possible, right? Because in trying to achieve a whole coin, they'll push the price out of reach. So, I think ultimately, even the retail adoption going upwards from 100 million users and bringing like a wider spectrum of society into it via ETFs. That's like ETFs are ultimately an accessibility feature, right? For people who are not so IT savvy, they don't want to do backup. Maybe it's a simple thing. They can call their broker. So as you get more people into it, just that larger pool of people trying to accumulate some kind of psychological target like 1 Bitcoin will do something to the price alone, even without the other kind of institutional buying. Yeah. So I think there's definitely a factor of, people learning to not trade, like to hold over time. Because one thing that, there are people that criticize the stock to flow or the median multiple, that it's been going up at 60% a year. And they say, yeah, but that will taper off because, the halving, the supply is much smaller. The price is higher, so people won't be buying as much. But I think it's the reason that is wrong, like, and counterintuitive, is that over time people are learning to cold store and to save and not spend, not speculate, not day trade. And so, while it's true that the new coins mined is halving each cycle, the number of coins on exchange is also shrinking proportionally. So if those things, they can cancel out basically, right? So surprisingly, you can still get into an effect where the halving has a major economic impact because, yes, it's a small percentage when you go from like 3.5 to like 1.75 or what have you. If the number of Bitcoin on exchange as an ongoing basis falls from like 2 million to like 500,000, well, okay, there you go. It's actually a bigger percentage of what's relevant, which is Bitcoin you could trade, right? So, and it's not just Bitcoin you could trade because currently on exchange, because they'll say, well, yes, but if the price tripled, they'd all come piling out of cold storage and sell. But actually, experience says they won't. They get into a mindset of saving for the long term, and they're not selling.
Well, there's another point too. I call it the sell for what threshold, but at some point,
yeah,
what are you selling it for? Like, are you buying dollars? Like, you're not selling Bitcoin, you're buying some other thing, right? So you're buying dollars, you're buying yen or something, but at some point you don't want that thing. So eventually there's nothing to sell it for, right? There's only so many houses you can buy, right? If you want to buy houses, but there's just nothing else to keep your money in.
Yeah, it's like the efficient reallocation of capital to what's important in life, right? Like, you don't need 20 homes. Like, you can live in one at a time. So, do you need 4? Do you need 3 investment properties with maintenance costs and all of these vacancy rates and whatever that may be? And it's just kind of the efficient reallocation of capital into what's should be valuable to people. Brought up the idea of a lot of stored monetary energy in the real estate market. And I think we'd probably see some reallocation of that over the next decade. Probably take a lot of time because people have to learn about the technology and Bitcoin.
Yes and no. I think there's another thing too with the ETFs. It's a tax advantageous structure too. Adam, you mentioned a bunch of things, but people putting their 401ks into Bitcoin too. That is a new avenue to allocate your savings too. And I think that has yet to really take off. But I don't believe it's going to take a lot of time. And this is why I'm saying Omega Candle soon, because once people start understanding, it just snowballs. They don't even need to fully understand it to do it, right? All you need is monkey see, monkey do, or people listen to their financial advisors and their financial advisors are selling them on ETFs in their 401k. And as soon as that takes off, pension funds, whatever, it's just going to go, and it's going to go very quickly.
Yeah.
Do you mind if I hop in on a specific question with that? And we might be pushing it up on time, so I'm happy to go as long as you two want, but we don't want to take advantage of your time. But just with what Samson said right there specifically in terms of people understanding it, and I think between Adam and Samson here, we've got a good kind of memory base, so to speak, of probably people coming up to you saying like, I don't get it. Whether it's proof of work or hashing or hash rate or people running a node or the decentralization concept, what's your kind of general, simple to understand and grasp response to that, which hopefully then is a cataclysmic event or a catalyst of an event for that individual person to then go, do more research on their own. But what is that kind of like general feedback that you'd have for them when people just say like, I don't get it?
Yeah, I mean, I think it's ultimately down to kind of social proof in a sense that, if you look on YouTube for some of the very earliest financial news show discussions where there'll be Trace Mayer or some of the very early people talking about Bitcoin, and they just look at them like they're crazy, right? It's like, is this a joke? The news interviewer is kind of laughing in their face, kind of thing, and like, is that serious? And it's flipped, Now, if you see people on financial news shows and they're apologetic, like, I should know this, but I don't. Can you explain it, kind of thing? So I think it's people take on trust a lot of things because everybody around them believes it. Like, fractional reserve money. As a child, you get to see some paper cash, some notes, and you just thought that that's money, and you may not find out like how that really works until later. And many people never ask like how it works, right? They just assume it's kind of stable and limited, but is it really, right? So I think it's just down to that. And then, of course, there are a lot. It's interesting to see, the smarter people actually ask very good questions that they can get stuck on, right? So if the more kind of savvy they are in terms of, thinking about the dynamics of things, dynamic systems, like, people into physics or engineering fields, they'll ask a bunch of interesting questions, like, and they're like serious questions, like, well, can't you change the source code to like print more? I'm like, well, no, not really, because everybody's verifying it, right? That wouldn't fly, And you get into some analogy like, well, you could change the rules of chess, but that doesn't mean anybody's going to follow you, right? So you have to find some analogy to explain it, but it's like, software is counterintuitive, and like open source decentralized network that you could copy it. Why wouldn't people follow the copy? And then the other thing they'll say is like, well, why is it scarce, right? There are lots of coins. Like, why is it not scarce? And there's a really funny clip with Keanu Reeves where he's being interviewed, and the interviewer is trying to sell him on NFTs, and he kind of ends up laughing at the interview. It's like, well, it's not really scarce, is it? So I think like what makes Bitcoin scarce is that it's doing proof of work. So it's in a way it's a physical thing, right? So it's got it translates into some scarcity in the physical world, which is the use of power, the infrastructure, physical mining machines. Unlike most of the altcoins, it actually is digital manifestation of a physical world thing, and the physical world is limited. And it turns out that's important. And then in terms of trying to explain to people why that's valuable and important, I try to think about ways to react to like financial news interviewer questions to try and explain it in a useful way. And one of the things I was thinking is that if you think about gold, physical gold, thousands of years ago, why did humanity settle on this as a good store of value? And it's because it's scarce. And then secondarily, because it's scarce, that has an implication, which is it's going to be costly to dig up and refine more of it, right? So it's in the fact that it's scarce means it has an unavoidable cost of production. And so Bitcoin, that's the reason basically that Bitcoin has that. It has to have an unavoidable cost of production. So, you might superficially say, well, why is this work going in there to create this thing? Well, it's because it's very valuable to economic organizations to have hard money. And hard money, I think, must have an unavoidable production cost. Otherwise, it's basically a variant of political money where if you make pleadings to the right person, they can print some more of it for you, right? So that's my attempt. Of course, the simplest is it's like digital gold, and that gets people started potentially. But people are smart; they ask interesting questions as well.
Yeah, I like the digital gold comparison because it's easily understandable. I think there's so much complexity and nuance to Bitcoin that you have to be deeply invested in or have a broad understanding of so many different areas of subject matter, from mathematics to engineering to computer science to energy production to monetary history and so on and so forth, right? Like for nation-state engagements, I tend to focus more on alignment of incentives. We don't really go into all those details. We don't talk about the nodes or the code or the proof of work aspect. We just say, well, do you want to build a hydro dam, right? Well, maybe Bitcoin can help you build that hydro dam. Or you want to reduce debt. Maybe you can do a Bitcoin bond. So focusing on incentives, just like the Bitcoin core system has the right incentives to align hodlers with miners to everyone else. And I think that's an easier way to get it across. But if I do need to engage directly, I try to more point them in the right areas of thought exercises. So a friend of mine was thinking to buy a house. He's not a Bitcoiner. And I kind of ran him through the scenario of why you shouldn't buy a house or buy a property right now. Because in Canada, right now, they've increased the capital gains tax. So if you want to exit, you're going to be paying more. And if you want to sell, you have to sell into the market. And the market is very weak right now because everyone's poor because of inflation and carbon taxes and whatnot. So that market for buyers is small too, right? The door in is big, but the door out is small. Other things like maintenance and cost and interest rates on the mortgage. I just outlined all the reasons why you shouldn't buy that. And maybe he'll figure out Bitcoin is a better investment. But I just generally find it doesn't help if you're too direct and pointing to Bitcoin. It's better to be more indirect and allude to the benefits of Bitcoin that way.
Yeah, the inverse concepts.
Yeah.
What are the benefits of real estate and what are the downsides of real estate? Think about the opposite.
It's so like forcing first principles thinking. So, okay, if all these things are reasons not to buy it, what is something I should buy, right? And maybe they'll think, well, is there some asset with a global 24/7 marketplace with incredible liquidity where the rules can't be changed from out under you, like the interest rate or capital gains rates, tax rates? And maybe they'll figure out Bitcoin, but who knows?
Yeah. You're getting folks to conceptualize opportunity cost without telling them what opportunity cost is.
Yeah.
Well, I would love to kind of conclude you just getting a 10 to 20 second blurb about what you're most excited about looking forward. And, it's been an honor having you guys on. So I wanted to say thank you. It's been so fun. I look forward to having more with you guys in the future as things continue to develop here. So it should be a lot of fun. So maybe Adam, we'll start with you.
Yeah, I mean, plus we're all energized by seeing Bitcoin continue its track and reach its potential. So, it's fun hanging out with Bitcoin and MicroStrategy analysts and fans, right? So, thanks.
Yeah, absolutely. Absolutely.
Yeah, thanks. It was a great show. And I'm most interested in seeing more of the ETF impact play out over the coming 6 months in conjunction with the election in the US. So that's what I'm watching.
Yeah. H2 of 2024 will be very interesting. It should be a lot of fun. Those of us in the US are going to be in for a whirlwind. So, yeah.
Yeah.
All right. Well, I appreciate the time, everybody. Welcome to Quant Bros. It's been great having you. And we look forward to having you guys in the future.
Thank you.